Shitu. Shitu.
Good evening, sir.
Good
My name is
evening.
Shitu. I based in Warri.
Okay, you're welcome, Shitu. Coming just a minute. Okay. Sylvia.
Good evening, sir.
Good
My
evening.
name is Sylvia. I'm based in Lagos and I studied accounting.
Okay. Wow. You're welcome, Sylvia.
Thank you.
Afsat.
Good evening, sir.
Good
I'm
evening.
based in Kano and I studied accounting.
You're welcome, Afsat.
Thank you. Thank
Yeah.
you.
Titilayo.
Okay, my name is Thomas. I based in Lagos. Good evening, sir.
Yeah, good evening, John Thomas. Good evening, good evening, good evening. Fine. Basirat. Right.
Good evening, sir. Yes,
Good
good evening,
evening.
sir. I studied accounting and I based in Abeokuta.
Wow, you're welcome. You're welcome, Basirat. Chimobi, right? I think Chimobi, right?
Yes, you got it correctly.
Okay.
Good evening, sir. Good evening, everyone.
Good evening.
My name is Chimo Bim. I based in Port Harcourt City.
Okay, PH, you're welcome.
Yes.
Welcome, Chimobi. Joy Ogbonna, right? Joy.
Yeah.
I have two Joy here. Joy.
Good
Which one of the Joy? Okay, Ogbonna,
Joy.
Joy first. Ogbonna,
Yes, sir. I'm Obonna Joy. I based in Lagos, sir.
Lagos, you're welcome. You're welcome. Okay, the second Joy. So I
Okay.
have wait. Calm down now. Calm down. So we have Joy. So that means that Joy is coming. Is that not so? Joy, the second Joy.
Yes, sir.
Yeah, okay. Go
Good
ahead.
evening, sir. Good evening, everybody. So my name is Joy Omogiade, and I'm based in Lagos. I studied accounting.
Well, you're welcome, Joy. You're welcome. We just have 1 minute, so we can continue our lecture. Envy, are you there?
Okay, good evening, everybody.
Good evening.
My name is Henry Blessing. I'm currently in Anambra. I read economics.
Oh, you're welcome. You're welcome, blessing. Blessing. Okay, you're welcome. Winifred.
Good evening, sir. My name is Winifred. I based in Kano.
Okay, you're welcome. Okay, quickly, others, I think we'll get to know each other as we actually move. My sincere apologies for that because this is 8:45. It's already 8:45, 8:40 rather, right? So we can continue from there in our next class. Are we still together? Right. I'm sure we are together. Right. Okay, quickly. Please confirm if you can see my screen. If you can see my screen, confirm. If you can see my screen clearly. Okay.
Yes,
now,
sir.
Thank you. Now, let me quickly do a brief recap of what we did in our previous lecture. We've explained costs as a resources expended in making goods. We equally explained the cost unit, which is the unit cost of a product. Then we explained the classification of costs. From the classification of costs, we actually move to the cost behavior. The cost behavior is the way costs respond to the levels of activity. Now, this will now take us to the cost behavior and the range of level of activity. When I said level of activity. Level of activity could be the hours, numbers of hours, the units produced, the numbers of passenger, the space. It could be this, right? So that is the number, that is the levels of activities. Because as of today, when you are using 20,000 naira to produce 50,000 units, as at 2024, now as at 2025, you can agree with me that that cost would have changed, right? So how cost react to the what, the levels of what activity. Now the cost behavior, right? There are three cost behavior, where we have the variable cost as well as the fixed cost. In our previous lecture, we explained that the variable cost, total variable cost, varies with the levels of activity, meaning that if your levels of activity is 20 units and the variable costs class, the variable cost per unit is also maybe 1 naira per unit. When you multiply 1 naira per unit times the level of activity, will give you your total variable cost. Now, if the levels of activities increase to 30 units and your variable cost will remain constant, your variable cost per unit will remain constant of 1 naira per unit. 1 naira per unit times 30 units. What do you have? You have 30 naira. That is the total. You can see that as the level of activity keep changing, right? What happened to the total variable cost? The total variable cost also changes in line with the what, with the levels of what. But what actually happened to the variable cost per unit? The variable cost per unit will remain constant. Now, having explained this, we equally move to the fixed cost. And we said that fixed costs are period cost. When you hear, if someone said, period cost, you should know that a period cost means a fixed cost. Period cost means a fixed cost that does not expected to change, right? But however, fixed cost sometimes changes on the long run. Now, meaning that the total fixed cost will remain constant, plus the total fixed cost, it remain constant. Now, when I say total fixed cost remain constant, is when you are paying a constant rent for a particular space for production on a what? On a year-on-year basis. Whether you engage in a production or you don't engage in a production, that fixed cost, it is unavoidable. You must incur it. You must, unless if you don't want to continue what? Continue operation, right? Now, why the fixed cost per unit actually what? The fixed cost per unit actually what? Actually varies with the what? With the levels of activities. Meaning that is why we said fixed cost on the long run could varies. How does it work? Imagine you, electricity for instance, we will say electricity is a fixed cost because it is unavoidable. But guess what? Electricity could be a variable cost, right? Could be that fixed cost, could be fixed cost, could varies, right? That your fixed cost could what? Could actually varies. How? Now, you produce 20,000 units with 20 units, you produce 50,000 units with 20 units. Now, when you want to produce 100 units, definitely that your unit, right? The unit you use will actually change because it will not be enough to produce that 100 units or 50 units. You could see that the electricity has actually changed, right? Now, I want you all to understand performance management. It is not difficult. See, once you understand this basis, understand that fixed cost is fixed. Total fixed cost is fixed. Fixed cost per unit varies. Why? Total variable cost varies. Variable cost per unit remain constant. You know, all these things, we need to understand it. It is the basis of performance management. And we should not forget, What is the purpose? Is for decision making, right? Is for the management to make what? To make a decision. Now, we equally explain the fixed cost is divided into two, right? This discretionary, the committed. The question now is, what is discretionary? Now, at the beginning of every most of us work, right? We work in an established organization, right? Now, at the beginning of accounting year or at the beginning of the year, you will set a particular budget that, okay, this is what you want to spend, right? That is what we call discretionary fixed cost. It is based on the decision of the management. They can decide to alter it, to change it, that don't spend on advertising costs. Don't incur, instead of you incurring advertising cost of 20,000, reduce it to become what? 10,000, right? Now, what is committed cost? The question is, now, committed costs are costs that, you have a business, maybe as at the beginning of January, right? And they say, oh, how much is the total salary from January to December? It is this specific amount. That is it. So, and you've already set it aside. That is what we call committed. You must, if you want to continue operation, you must pay them. If you don't pay me salary, how will I work? Now, we have rent as well. Rent, it is committed. It is committed cost, right? Now, committed cost is divided into the standby cost, right? The standby cost, enabling cost, and stepped fixed cost. We explain all this in our previous lecture. Let's quickly fast forward to mixed cost. Now, don't forget that mixed cost is part of the cost behavior, where we have, under the cost behavior, we have the variable cost, the fixed cost, the variable cost, the fixed cost, and the mixed cost. The question now is, what is mixed cost? Another name for mixed cost is called what? Semi-variable cost or semi-fixed cost. When they say something is mixed, right? Maybe you mix rice and beans together. That is mixed cost. Now, for you to separate that rice from beans, you need to use what we call cost estimation. This will take us to what we call cost estimation. Now, class, what is cost estimation? Cost estimation helps or assists the management to use an historical cost to predict the future. For what? For decision making. Class, you are planning that, oh, the total cost that you will use in production for 2025. Maybe you are making a budget in 2024. You are forecasting, you are predicting for 2025. Now, which cost are you going to use to do that? You will use historical cost. You will use the cost of 2023. You will use the cost of 2024. You will use the one of 2020 to predict what will actually happen in the what? In the future. Now, for estimation to be possible, we must be able to identify, in this case, now, when you are predicting the future, for the estimation to be actually be possible, you are estimating that this is what you will have. This is your total cost. In this total cost, there is the element of there is the element of mixed cost. When you are predicting, there is element of mixed cost. Now, what is this mixed cost? Mixed cost can be analyzed into fixed and variable cost. You can remove, what is it called? Beans. You separate beans from what? From rice. Now, if you want to separate beans from rice, which method are you going to use? In order to separate the cost, when you are predicting for the future, you need to now separate it. Which one is fixed cost? Which one is variable cost? Now, when you want to now separate it, the method you will use is what we call the cost estimation, right? These are what we actually discussed in our previous lecture. And we equally said that our focus is on high and low method and a regression analysis or least square method, right? And we're able to solve question on high and low method to separate our fixed cost from our variable costs. Now, in today's class, now I've equally update the playlist where you will see the regression analysis or the least square method, right? Now, in today's class, we should not equally forget that we did high and low with inflation, where we have a step-up cost, right? Now, it is the mixed cost. It is the mixed cost. Okay, it is the mixed cost. It is, what is it called? It is the fixed cost that's divided into, under the committed cost, you can have enabling cost, standby cost, and step-up cost. Don't forget, we explained this in our previous lecture. When you have a step-up cost means that abnormal increase in the fixed cost. It could be as a result of inflation. It could be as a result of increase in your level of activities. That is why you have what we call step-up cost, right? With that, your cost will actually change. We're able to look at, in our previous lecture, we're able to look at high and low with inflation, the normal high and low without inflation, as well as what? With inflation. In today's class, we shall continue with high and low with inflation, right? We shall look at further example under what? Under the high and low with inflation. Now, before we start this question now, I just have 2 questions to solve so that we can move. I hope every one of us, I hope you all have our course outline, PM course outline. I sent the syllabus that we will follow, and as well as I summarize what we need to touch in PM. So if you have it, you can quickly re-forward it. You can send it back to the platform so that others can actually see. Now, before we move on, do you have anyone that have questions based on what we did in our previous lecture? Do we have? I guess no. Are we good? No comments. Away.
Yes, we are.
Hello, sir. Good evening.
Yes, we are.
Can you hear me, sir?
I can hear you.
Sorry, I'm a little bit confused because the last person that taught us, the topic he treated is risk and uncertainty, of which he did some little justice to it. And the notes now, I don't know whether it's for me to leave space for himself or leave space for you.
You can just, Mr. Friday, use another note, or anyhow that you want to do it that will be convenient for you. I will be taking one part, he will be taking the other part. So you will always meet him on Monday.
Okay.
Okay. Go and check, please. For you are just joining, just go and check the YouTube, right? Just check the YouTube. Check PM playlist is there, so you can download and actually watch what we've done so far. So are we good? Do you have anyone that have question with respect to what we did in our previous lecture? Do we have? Okay, we move, right? Okay. Okay, thank you. Now, let's quickly look at this question. Let's solve this question together. So this is a solution. Now, class, this is high and low with inflation when you have a step-up cost. And some of you, some professional students will think, oh, IB, why do you want to take high and low? We should have moved. I have my reasons. So I have my reasons. I have my reasons, because when I start to make reference to high and low, you have to separate the fixed cost from variable costs. Mr. A will not ask me question that IB, which one is high and low again? We have equally done that, right? Now, please pay attention. It's very important. Now, no name of the company. Oh wow, I didn't actually include name, but that's fine. What is the required? Don't forget that our principle is you need to read the required, what they say you should do first. Class, if you understand the requirement, it is assumed that you solve 60% of that question. don't just jump into that question because it is high and low, because it is limiting factor, because it is this. You just jump, and the way you jump in, you will jump out. That is it. At the end, you will not tell your friend, is it not that question? I know it now. Moreover, you've used wrong approach. At the end of the day, when you see the score, you're like, no, now you can't score this. You know the question. I saw it now. No, it could be because of your approach. That is more. Examiner, the question says A, you are doing B. Okay. Imagine, say, do A, you are doing B. Is there any correlation? No. So please pay attention to the requirement. Understand it. Now, what is the total cost at an activity level of 10,000 units and 18,000 units respectively? What is the total cost, class? And we should not forget that we have a function that we use in our previous lecture, where we have y equals to a plus what? Class, a plus what?
Bx.
X, right? Where y is the total cost. A is the fixed cost. Fixed cost is an independent variable. You can see that it stands on its own, class. You can say that B depends on X. B is what? It is a dependent variable because it depends, both B and S, they depend on each other. You can see the gum. Is that also the gum body? B and X. So that is dependent variable. You can say that Y is an independent. You don't stand on it. You just like, okay, Mokuna, just come give me answer here. Total cost, right? Here we have what? A is the fixed cost. Class, if you want to get the total cost, you cannot get the total cost without you calculating B. You need B before A. B is your variable cost per unit. Now, for you to get B, class, you have B equals to variable cost per unit. Variable cost per unit, which is B, equals to highest cost minus lowest cost divided by the highest output. The highest output, please, we should not forget our steps, right? Highest output. Don't forget, output is just English. Either level of activity, either it is labor hours, either it is numbers of, depends on what is given to you, right? Highest output minus lowest output, right? Now, class, this is how you need to calculate your B, because without this B, you cannot calculate A. Class, without this B, you can't calculate A, and you can't calculate the total cost here. Class, the total what? The total cost here. Now, let's quickly go back to the question. Variable cost. And don't forget, class, what is inflation? Let's pick it from there. What is inflation? What is inflation? Any economic student? I think someone mentioned, okay. Let me start from Ayeni Basira before Bello.
Yes, sir.
Okay.
Inflation is the persistent rise in the price of goods and services, like the price of goods and services in the economy.
Okay. That is an increase in the cost. That's fine. That's fine. Okay. That's fine. That's fine. That is a very good one. Now, class, high and low with inflation, class. Why do you have to include it? Because in 2024, if to produce 50,000 units will cost you 100,000, definitely in 2025 to produce that 50,000 units, it will cost you more because of inflation. You cannot compare the inflation of 2024 with the one of 2025. Class, what is the current inflation rate? If you use AI, I will know. What is the current inflation rate?
It's at 22, I think 22.2.
22%. Yeah.
It dropped
Right.
from 23%.
Okay, you all tried, right? Now, the inflation currently is 22.22%, compared to May, where we have 22.97%, just a slight decrease. Now, what I'm saying is, you can compare what we have, right, in 2024. What happened? What we had in 2024, right? Now, that is it. You have to factor in. That is why, for you to separate that fixed from variable cost, you have to consider inflation, right? You have to look at it. Will there be a step-up cost? Step-up cost means abnormal increase in fixed costs that could arise as a result of inflation. It could be as a result of increase in the level of activity. Class, distinguished professional, I just want you to understand performance management. Please don't cram. You don't need to cram anything. Just understand. At the end of the whole performance management, right, you should be able to say, yes, you can solve questions. Do you know the reason why most professional students fail performance management? Because what they prepare for versus what they see, there are two different things. I prepare for this, I can now come in another form. And even if they actually prepare for that particular stuff, but because they don't have the understanding of that particular topic, that is off. So please, as we move, just follow. Now, there will be, the question now say we should calculate total cost. Now, mind you, in the question, we have the activity level, the total cost, the variable cost per unit is constant, which we know within this activity range, and there is a step up of 10% in the total fixed cost when the activity level exceeds 11,000 units. The same thing, similar to what we did in our previous lecture. Now, class, there will be a step-up cost, which means that your cost will increase. You cannot just go and increase your fixed costs. No, it has to start from somewhere, from your variable cost to your fixed costs. Class. Now, in this case, we have to do what? We have to use high and low. If the activity level exists, now let's look at it together. Because I didn't put here, we're supposed to have year 1, year 2, year 3 before the activity level, but that's fine. It's fine. Now, can you see what is the highest cost? What is the highest cost, class? What is the highest cost?
274. 274.
Okay, no.
2764.
This is now we call figure here. 274,000. If it is class, if it is 1,000, call it. Say it is 1,000. If it is unit, say it is unit. If it is per unit, these are the things, little things that fail students because of these small things. Franca, please mute your mic. Right now, at the beginning, I'm supposed to write the name of the company. That is 1 mark. Imagine you have 1 mark. You just write, they just tell you that AA Limited. And when you are doing your suggested solution, you write AA Limited, 1 mark. And you take note of all these small things. You take 1 mark here, 1 mark here, 1 mark here, 1 mark here. Before you know, you have above 50 now, you move on. Right? Now, this is 274,000. Right? Now, class, let's quickly read. Let's analyze this cost. Let's say this is year 1, or this is levels of activity is 204. You can say that when the levels of activity is 8,000, the cost becomes what? 204. When the level of activity become 12,000, what happened to the cost? It increased. When the levels of activity become 15, what happened to the cost? It increased. So step-up costs may arise as a result of abnormal increase in the level of activity, or as a result of inflation. Now, a practical illustration: you have a space in the city, maybe in Guarimpa, for instance, in FCT, or let me say in anywhere, maybe in that space, in that rent space, right? Maybe you are paying just 10,000 naira per year, assumption, right? Now, and you are using that small space, at least you use it to produce 50,000 units, right? Which makes sense. Now, suddenly, sales actually increases, things become better now, because of the quality of the product, right? Now, and you're not thinking of expansion, that this space will not be enough. We need to take the next shop. Now, if you take the next shop, definitely your fixed cost of the rent has actually changed, right? According to what? The level of activity. Now, we could see what happened here. From 8,000, the cost is 204. From 12,000 units, the cost is 250 naira, 250,000. Sorry. Now, the question now says that, don't forget, this is high and low class. If the activity level exists 11,000 units, class, from here, from 8, if you want to now predict it, right, it has to start from somewhere. Class, if you are in 2024, class, and you want to predict 2025, you have to start from 2024 to predict what will happen in 2025, class. So you cannot use any of these costs. So minus, what is the lowest cost, class? What is the lowest cost? What is the lowest cost?
204,000.
Okay, 204,000. We have to increase it because we are estimating for the future that, if we are producing 8,000, if we exist this, there will be a step up cost of 10%. Please, the person should mute his or mic. Right? There will be a step up cost of 10%, class. So we have to increase it. We have to do what? Increase it, the cost. Right? Because 8,000 naira, you are predicting for what will happen in the future. You start from the historical cost, the 2024. Okay? So now, if you want to increase it, there are two ways. The first way is that this is 10%. This is already 100%. Right? This is already, you have to just add, you can have, we can have 110 times 110%. You can have 110% so that you can have the 10%. Or, I'm coming. Alternatively, you can, I'm coming. A minute. Let's do this first. Right? So what is the highest output? What is the highest output?
15,000.
15,000 units. 15,000 units minus the lowest output.
8,000 units.
Thank you.
8,000 units.
Thank you. Units. Now, class, what do you have here? In the first place, you have 274. Okay, 274. I'm coming. 274 minus 110%. 110 divided by 100 times 204. What do you have?
224,000. 224,400.
224,400. Can you see? Can you see? When you are predicting it, you can see what you have. The cost has increased. Now, what do you have here? 15,000 minus 8,000 units. 15,000 units minus 8,000 units. What do you have?
7,000 units.
You have 7,000 units. So, class, if you divide, what is your variable cost per unit? What is the variable cost per unit?
7.1.
What do you have?
7.1.
7.1. 7 naira.
Thank you. 7 naira, 1 kobo per what? Per what?
Per unit.
Per unit. Thank you. Now, alternatively, if you don't want to do it this way, all right, you can say, oh, you can go back to, let's go back to SS1. This is 204. Then you can now say 204, charge 10% of 204. If you charge 10% of 204, what do you have? If you charge 10% of 204, what do you have? 10% of 204.
20,400.
20,400. Yeah, add it. Add it. So you know we are going back to SS1. Yeah, add it. What do you have? You have, what do you have? You have 224,400. You can see whichever way you want to use, whichever thing you want to use to get your 224,400, use it. Class, I know experience have shows that some students will go and increase the total fees cost only. Class, hello. You cannot increase total fees cost without your inflation supposed to reflect in your variable costs, because it will affect your variable cost as well. Now, the question is, what is variable? Variable costs are costs that varies. Those who are directly in production, the labor, inflation will affect them. The material you are buying, it will affect them. So you cannot just go and charge 10% on fees. It is not done that way. You have to start from somewhere, which is the variable cost. Class. When you start from the variable cost to include the inflation cost, then you move down to your what? To your fixed costs. Class, are we still together? Who is against me in this class? Choice. Do you have anyone that is against me? Okay. Do you have anyone that is against me? If you're against me, let me know.
I'm against you.
Same here.
Okay.
I'm against that 110%. I'm figuring out why we're using 110 instead of the 10%.
No. We are, I said alternatively. This is the alternative. See, if you know that this approach, you don't understand 110, please use this. They say step up means it will increase. This is already under, you have to add 10% to it. Do you understand? So that is why we have to do it that way. We move on that lane. If you know that 110, I did not understand though. You can decide to say, 204. I have to add 10%. Add 10% now. What do you have? 224,400. Olatunji.
Okay, yeah. Thank you. Good evening. So the impression I got from the question is that the variable cost per unit is fixed, right? And the element that is changing or inflated is the total fixed cost, which is this 10%. So I'm then wondering why the 10% is applied on the total cost. And
now, okay, now let's go back to economies, right? Okay, interesting. Let's quickly go back to economies. What give you total costs? Fixed cost plus variable cost. Is that not so?
Yes.
Fixed cost plus variable cost will give you what? Total costs. Is that not so? Now, the question now is, you said, oh, why do we have to apply it on total cost? What make up the total cost? That is the question. Is it not fixed cost and the variable cost? So definitely, Olatunji, definitely, the fixed cost is inclusive in the total cost. Do you get it? Your total cost is equals to your fixed cost plus your variable cost. And they said that, oh, there will be a 10% increase in the total. Now, what will make up the total fixed costs? Right? What will make up the total fixed cost is from the total cost. Your total cost is inclusive of fixed cost. Is that not so? So you can charge it from there. You cannot just say, because it is fixed cost, then you now go and charge only fixed cost. Hey, wait. They are telling you that there will be a step up cost. The question is, please, let's understand the English. The question is, what is step up? You say abnormal increase that arise as a result of inflation or increase in the level of activity. Now, when you are increasing the level of activity, it will affect the variable cost as well. Because your material, you are going to the market to buy material. Inflation will affect it. So you have to start from your variable cost. Olatunji, are you getting my point?
Yes, thank you. Okay.
No. Do you get my point? Do you get my point?
Yes, I did. Yes.
Okay. That's
no, but please, I would like
honestly,
you to still shed more light.
Honestly, if you don't understand,
Because
I will say it again. I will say it again. You get, because I just want to.
So the way I'm looking at it is, that function is y equals a plus bx, right? And that a is the total fixed cost. So normally, to be honest, the way maybe it's playing in my head is that I will have just done a 1.1, which is 110% of that a in that function.
No, it will be wrong. Step up cost. You know, it will be wrong. We are talking about inflation. So are you saying that inflation will not affect the variable cost?
Okay.
That's the impression you are trying to create. Okay, it's inflation. Oh, okay, it will not affect the variable cost now. But you are going to the market now to buy material. Okay. Do you get?
Thank you very much. Yes.
Yeah, you're welcome. Yeah, you're welcome. Bukola.
Good evening, Mr. Ibrahim. So I just wanted to understand something.
Good evening.
Here the question says activity range. I'm sorry, it says there's a step up of 10% in the total fixed cost when activity level exceeds 11 units. Now, we applied the 10% on the activity level of 8,000 because the activity level has moved from 8,000 to 12,000, which exceeds 11 units, right? Okay, I just wanted to be sure. Okay,
see,
thank you.
Bukola, there are different approaches to this question, right? Now, you see that question that we did last week, right? I think last week, right? We will use another approach again tonight. Please, let's just understand the concept. Now, how it works. Now, the level of activity is 8,000. We should not forget that that this is cost estimation, we should ask ourselves, let's forget about the figures. We should ask ourselves question, what is cost estimation? It helps the management to predict for the future using the what? Historical costs. Class. Now, you are in 2024. I forgot to put year, maybe year 1, year 2, year 3. You're in 2024. And you have 8,000 units. I now say, oh, if this thing exists, so there will be a step-up cost of 10%. You are including inflation ahead of your cost. Now, you could see that from 204, the figures moved to 250 units. 250 units, 250,000, which means that 250,000 is not just there. It has already included inflation. You can see that it moved from 250 to 274. You've included, so you've considered inflation in all those places where you've not even done anything. Is from the 8,000, because you're looking at it that it's just like you're predicting for what will happen in the future. Do you get that now? Do you get it?
Yes, I get it. I get it now. Thank you so much, sir.
Yeah, you're welcome. Quickly, Samuel, quickly. So I will move, please.
Okay, thank you very much, sir. So, sir, my question quickly is, so if we should apply our step up to the variable cost, there is no need in any way for us to apply it to the fixed cost any longer.
Samuel, interesting. The question is, class, interesting. That's a very good one. So, see, variable cost is your B, class. Now, you cannot get your A without B. So, which means that you use that B that include inflation to calculate your fixed cost. So automatically, your fixed cost is also inclusive of this type of cost. We'll get there.
Okay, so sir, you just cleared what I was thinking.
Keep thinking. Thank you. Thank you. Any other question? Let's quickly move, please. Right. So now we've calculated the variable cost. Right. The next thing is to do what? To calculate your fixed cost. We bring out our function equals to A plus BS. Now, I've said it that you can use IS costs and IS outputs, anyone, or lowest cost or lowest output, because we just want to make A the subject of the formula, right? So let's say using lowest cost or highest cost. Which one are we using? Highest cost or lowest cost? Highest cost or lowest cost? Class.
Highest cost.
Lowest cost. Lowest
okay.
cost.
Please let's do lowest cost.
Okay, it's okay. It's okay. It's okay. It's okay. It's okay. Thank you. Using lowest cost and lowest output, meaning that we want to make A the subject of the formula. Our B is already 7 naira, 1 kobo per unit. Now, we need to make A the subject of the formula. That is why we say, oh, we need to assume that, oh, using lowest cost and the lowest output. Class, the question says that okay. The question says that we should do what? Calculate the total cost of at an activity level of 10,000 and 18,000. We cannot do that. We can't calculate these total costs. We can't without getting our variable cost as well as our fixed cost. Now, using the lowest cost and the lowest using the lowest cost and the lowest output to get our fixed cost. Now, our total cost. What is the lowest cost from our total cost? What is the lowest cost? 224. Class, are we still together? Equals to A plus, what is our B? The B is variable cost per unit. Variable cost per unit, 7.1 naira per unit times, what is the lowest output? The lowest
8,000.
output is 8,000 units. 8,000 units. Please, you can mute your mic. So this is 224 equals to A plus 7.1 times 8,000 units. What do you have?
56,800 pounds.
56,800.
6,800 naira. So therefore, you can make this subject of the formula. You can see that you've already had, you've considered the step of cost, either using highest cost or the lowest cost. 224 400 equals minus 56,800 equals to A. Therefore, A is equals to, what is our fixed cost? And we should not equally forget that this is our total costs, our total variable costs. Total variable costs. This is total variable cost, right? Don't forget, we should not equally forget this, that this is when you multiply variable cost per unit times the numbers of units, you have your total variable cost. If this total variable, if this unit increase to 10,000, if you multiply 10,000 units times 7.1 naira per unit, your total variable cost will change because it changes according to the levels of activities, while your variable cost per unit will remain constant. Please, we should understand this, please. It's very important. Now, what is A? What is the fixed cost? What is our fixed cost?
167,200. 167,200 naira.
200 naira. So this is the fixed cost. This is the fixed cost. This is the fixed cost. Now, you've gotten your fixed cost as well as your variable cost per unit. So now you can now solve for the total costs. Now, what is the total cost? Class, you cannot solve for the total cost without calculating your variable cost.
Please let them check it very well.
It's 167,600.
167,600, not 200.
Thank you. So you cannot determine the total cost at an activity level of 10,000 units without you calculating the variable cost, right? Separating the variable cost from fixed cost, using the high and low with inflation or without inflation. Class. On this note, we can say, oh, at 10,000 units, what is the total cost? At 18,000 units, what is the total cost? So we go at 10,000 units, at 10,000 units. At 10,000 units, what is the total cost? Someone said, she said she is against me in this class. Don't worry, I will take your question. Okay. Y equals to A plus BX. We already know that our A, is the fixed cost. We've calculated the fixed cost to be 167,600.
So the figure is 167,200.
Hello, whether 167,200 or 167,600, use it
This
in your notes.
167,600 is correct.
Okay, that's fine. So you can change it, please. You can change it in your notes, please. Thank you. So B is equals to the variable cost per unit. What is the variable cost per unit? 7 naira per unit. 7 naira, 1 kobo per unit. What are we looking for? Our X, which is the levels of activity, is already 10,000 units. What is the Y? Y is unknown. Y is the total cost. Is unknown, which we are looking for. Because of this Y is very stubborn, right? Y is very what? Stubborn. This is what we have here as fixed cost. Fixed cost. This is your variable cost. Variable costs per unit. This is your level of output. So therefore, our ingredient is now complete. We can insert it, right? Our ingredient, we are good to go, right? So we can put it in the formula, in the function, right? So Y is equals to, Y equals to, which is the total cost. A, what is A? 167,600 plus B, what is B? 7 naira 1 kobo per unit times, what is the levels of activity? 10,000 units. Please, I just need final answer. Or let me test something here first. Okay. I'm coming.
238,600.
Okay, I'm coming. 160 something, 167,600 plus, when you multiply 7 naira 1 kobo times 10,000 units, what do you have?
71,000.
71,000. Now you can see that.
7,100.
What do we have when you multiply 7.1 times 10,000 units? What do you have? 71,000.
71,000.
Now you can see that the levels of activities is 10,000 units. The total variable cost. Can you see the total variable cost? This is total variable costs class 71,000. You will see that when you increase these levels of activities to 20,000, you will see the changes in the total variable cost, right? Maybe 100 or 80. Now, Y equals to, what is the total cost? Class, what is the total cost?
238,600.
238,600. So this is the total cost. This is the total cost. So you do the same thing with the second one where you have 18,000. When the levels of activities is 18,000 units, what is the total costs? Of course, the total cost will also increases because as the level is just increases, you will see that the total cost will also changes because the levels of activities actually changes as well. So at 18,000 units, someone should just give me final figure. Y equals to our fixed cost still remain 167,600.
295,100.
Okay, I'm coming. 7 naira 1 kobo per unit times 18,000 units.
127,800.
Okay, I'm coming. 127,800. I'm coming. Thank you. plus 127,800. You can see, class. You can see that as the levels of activities increases, the total variable cost also increases to be 127,800. So y, what is your y? What is the total cost?
295,400.
295.
400.
700 or 400?
400.
400. Now, distinguished professional colleagues, right? We've solved this question. Very simple, right? So I know some professional students, once as you see this question now, you will just go and apply it on total, only on fees cost. That means that you did not really understand what we call step up cost. If you understand cost estimation, one, if you understand the meaning of step up costs, you will know that this is costing. It will start from somewhere, which is from the variable cost to the fixed what? To the fixed cost. So any question? Quickly before we move. Before we move.
I'm against you, sir.
just they play. just they play.
Okay, I think I just want to call your attention to something. I think I saw a difference between using, you just use the low cost and low level of activity. So I try using the high. So I can see a difference of 100 naira. Is there
No, it's
something...
not material. No, there's nothing.
There's nothing. I just want to be sure about that. Yeah.
No, nothing. You can use IS now.
And I saw a difference of 100 naira. 100 naira.
100 naira.
What you did. Yes,
yeah,
between what you did.
Really? Maybe it could be from the variable cost. Probably you guys actually approximate the variable cost.
Yes, there was an approximation.
Yeah. So many from that variable cost. Yeah. So you are good. You are good.
All right.
Yeah.
Okay, so sorry, please. I want to ask a question. When we were trying to recompute the total cost using the low level of activity and the low cost, were we supposed to have adjusted for anything, knowing that the question said that the inflation comes at 11,000?
Olatunji, we've actually adjusted for it at the beginning, and that is what gave us that variable cost per unit to be 7.7 naira 1 kobo. So we don't actually need to adjust for anything anymore. Do you understand? So unless interesting. That's a very good one. We can't adjust for anything actually. You have to just adjust it. There are two approaches to, the perspective you are looking at it is the other approach, but I don't want to use it. I want to use an approach that you will understand that it is normal now. Yes, this is, you have to understand what you want to do.
I get it. But the other perspective might also be helpful, just in a situation, maybe, exam condition, whichever one comes in handy, one can always just follow it. But I get this one. Yes, thank you.
Yeah, you're welcome. So quickly, are we good? Abigail.
So I have a question.
Okay, Timothy. Okay.
Yes, sir.
A very quick one, please, so that we can move, please.
Okay, sir. Due to the inflation, we have total cost of 224,400 naira. So, and that total cost of 224,400 naira, we refer it as our lower total cost. So, in application of the function, which we say 224,000 is equal to A plus is equal to A plus using the function. So my own question is, what if our due to the inflation we have 224,400? What if is above the subsequent total cost? Like, what if that 224,400 is above 250,000 naira? Are we going to use that lower cost, or we are going to look for another one that is lower than due to the inflation of the total cost?
Okay. Yes, that is a very good one, Timothy. If you want to start, why we use 224 as lowest cost, look at from our function, highest cost minus lowest cost. Can you see it? Then we look at it
Yes.
that what is the lowest? It cannot be higher. Timothy, it cannot be higher.
Okay.
That is what you will have. Do you understand? It will always be lowest. If you have already identified the highest cost, if you have already identified the highest cost, right, minus the lowest cost, you will inflate it. Now, another approach I can actually use. No, let's just move on, right? Let's just move on. Do you understand, Timothy?
Yes, sir. Yes, sir.
Okay, that's fine.
Hello, sir.
Yes,
Hello, sir.
I'm with
Please,
you.
help me scroll to the question. I want to ask a question. My name is Abigail.
Oh, Abigail.
Please. Yes, sir.
A
Yes. Concerning
for
this
happiness.
place, you said.
Wait.
Mhm.
Calm down now.
I'm sorry.
That's fine.
This question that I said, where it's written when the activities level exceed 11,000 units. Now, I'm just thinking, I don't know, like this, I think this 12,000 is the activity level unit. 12,000. It exceeds 11,000. Why do we use 10,000 units? And also, why don't we use 12,000 and 15, then 18 in the additional question? So I don't know why
Were
do
you in
we
our
have to
last class?
calculate for.
Were you in class when we treat that inflation?
No.
Did you watch the video? No.
I just joined this something. I
Okay.
just joined this 2 days ago.
Okay. 2 days ago. I think we started on, when did we start, sir? It's a weekend. But that's fine. So you just go back to the YouTube and check the part one of
Okay.
it. You get. But let me quickly explain something to you here. You see, you can see that you can use this 250,000. You can't adjust for it again because it has already moved from 204 to 250. There's an inflation already. For you to have 250, it means that inflation has already taken place. It has already been included in the 250,000 naira. So if you're adding 250,000 naira again, is it not double? And you can see that it moved from 250 to 274. It has already been included. But because of cost estimation, when you want to predict for the future, you start from 2024. Is that not so? Historical. You start from 2024. Now, the question is, we have 8,000 units. If this thing exists 11,000 units, there will be what? A step-up cost of 10%. What it means is that our cost will increase. Now, the first thing you need to do is that, what is the highest cost? Okay, what is the lowest cost? Oh, you will always see that the lowest cost will be the first one, the lowest unit. And you look at it that, this thing, that 204, it has not been inflated. You've not considered inflation for the future if it exists 11,000 units. So you have to pick it from that side. And that is why we say, highest cost is this, lowest cost. That is why we now had 10%. Of course, inflation, if you want to adjust for inflation, you have to start from the back. You have to start from the variable cost. See, that English that they say in the total fixed cost, understand step-up cost, that it is based on inflation or increase in the levels of activity. You cannot apply it only on fixed cost because it is not only what you use in the production. What about the variable cost? That is why we have to adjust for it. Do you get? So you can go back. Do you get?
Thank you, sir. Thank you, sir.
You're welcome. Okay. So I will answer your question. Let's quickly move on, right? I will answer a question as we. Let's quickly move on, please. So, having solved this question, the last question we look at under the inflation. Before we go, our next topic, for those who have actually paid for the material, you get the material for marginal and absorption costing. That will be our next topic, which is on Sunday, right? On Sunday. We'll meet on Sunday by God's grace. Marginal and absorption costing. You will see where we need to break it down. Like, we'll break marginal and absorption costing to the extent that when you see contribution, you can know, you can say, this is contribution. Please, so many professional students ignore this, the beginning part of performance management, especially cost estimation and marginal and absorption. The most professional ignore it, but they don't know that the beginning of success starts from these two. If you fail to understand the concept, because if you observe very well, either cost accounting or management accounting, mostly it is variable cost per unit, fixed cost per unit, total fixed cost, total variable cost. But what if you don't understand this concept? What if? That is the question. Imagine you don't understand high and low, and someone is coming to take you standard costing. No be juju be that. In standard costing, in variance analysis, you will need marginal costing or an absorption costing. Imagine someone who does not have an understanding of marginal and absorption costing, and you want to take the person standard costing, variance analysis, or budget. In flexible budget, you will still use high and low method. In pricing decision, you will still use high and low method. So what are we see? The beginning, that is the cost estimation to marginal absorption costing, is the beginning of success. So once you hold it very well, you hold it tight. Yes, I understand. I understood the concept. Oh, total cost. I understand this is fixed cost. Oh, this is fixed cost per unit. This is this. You understand all those things. I'm very sure you will not have challenges when we move from ABC to other decision making, right? So this is the last question here, right? NextGen has recorded the following total costs during the last 5 years. Unfortunately, we are not. Unfortunately, we are not. Should I say fortunately or unfortunately? Anyone. We are not. We are even less than a year. So the 5 years is just an assumption. Actually, we are less than a year, right? So NextGen has recorded the following total costs during the last 5 years. You can see the total output, total cost, average price index. Estimate the cost equation expected in 2017 when the price level index will be 180. The question is, what is price index? Dari. Hello, Dari.
Yes, sir.
What happened? I see your hand. What happened?
All right. It's about the 110% that you used from the previous question that you solved. How do you get that 110? I'm following the lecture.
No, you can use the alternative approach. You can say, I say or
okay.
If you check, maybe you check the YouTube again. You can use alternative approach. Do you get? Instead of, you don't want to use 110, you can use the other approach.
Okay. Okay. Thank you.
So the question is, what is price index? Class, who can assist? What is price index? Away. What is price index? Excuse me. So, price
It
index.
is a tool that is used to calculate the increase or decrease in price.
Okay, to adjust for inflation. Is that not so?
Yeah. Yes, sir. Yes, sir.
Yeah, it's the tools that is used to adjust for inflation. Right? That is what we call price index. Class. That is what we call price index. Now, estimate the cost equation. See, forget about this English. Estimate cost equation. Class. Let me show you something here. Estimate the cost equation, right? Where is it? Is that question that we just did? Like, is it this question? Okay. Minutes. Estimate the cost equation. Like, the main function is the cost equation. So all those things, this is just English, right? Estimate the cost equation expected in 2027, in 2017, when the average price index will be 180, right? It is a tool used for forecasting inflation. Class. Now, you could see that we have 2012, there's a mistake here, actually. 2013, 2014, 2015, 2016, 2017. This should be 2018. Now, you can see we have here output, we have here total cost, and we have here average price index. So our class will end at when? 10 p.m., right?
10:30.
10:30.
No. I beg.
No, it's 10 p.m. 8:30 to 10 p.m.
I beg. Which one is 10:30? I beg. I boss said the other.
Please, sir, check your box. The box has 2016 and 2017 together.
But sir, there is no figure attached.
There is no figure.
Okay. Chef Pamini. So you say 10:30. Okay. So I actually have pre-recorded video on this particular one, right? So let me quickly upload that so that we won't waste much of our time on this, right? So you just go and watch it. In our next class, right? In our next class, we are moving to marginal and absorption costing, right? So sometimes you just have to sit and on that. Please don't do scan, because that is why most of for those who actually pay for, I will not actually include suggested solution unless, like marginal and absorption costing, the first class, if we solve any question, I can actually include it. But the steps, don't forget, all those steps will always be in that material. And also some other suggested solution that we did in class if I need to update the folder, right? So in our next topic, we're looking at what is it called? Marginal and absorption costing. I'm preparing you ahead so you can go and read. I'll update the folder, right? Probably before Sunday, right? Maybe Friday or Sunday or Saturday or Sunday morning, anyone. But I will update the folder so that you can just go through the marginal and absorption costing. So at the same time, for those who are just joining us, my name is Ibrahim Akindele, and you're welcome to NextGen Professional Associates. I will be taking you 70% of this. Is it 70%? No, Abba. I will be taking 60, not 67.
So I leave
maybe
it at that 70 now.
70 is
Leave it
looking
at
like
that
that.
70.
okay.
70 and 60, they are close.
Okay, continue. Okay. Anyhow, we
70 or not 70, we hold you here.
but that's fine. We are moving, right? So please, distinguished professional colleagues, if you want to understand performance management, please, you need to go back. It is not magic. Right? Me that I'm even taking you. It's just a privilege that I have. I usually post it on my status. I only have the privilege. So many of you can even do better, honestly. So if you can study, go back to the YouTube, sit down and write and look at it that, okay, does it make sense like this? Different approach. If you check textbook, this thing I just solved now, I don't do textbook solving. Go and ask those people who passed about 75% or 95% pass rates that we had last diet in performance management. I don't do Pathfinder according to Pathfinder solution. I don't do that. How we simplify what is complex in that Pathfinder for you, and that is what make us to be different from others. Okay. So please, you yourself, you have work to do. I have work to do. You have work to do. So let's work together so that we can be able to achieve this objective, right? So do we have anyone that have question before we go?
I have question.
Okay.
Thank you so much. Please, this question 4 that we did not attempt, is it the same approach we are to follow, like what we did?
Question 5. You check it.
No, I mean question 4. There is example 4 there. What we just had was 3. So are we to follow the same approach for the 3?
4 I'm coming. Example 4. I've solved example 4. Is it not the? Yes, I've solved it last. That is what we
last
time. Yeah. If you check the material, it's actually there. So
okay, yeah.
It's actually high and low, right?
Okay.
Still high and low. Then regression analysis, I will actually updated the playlist so you can check. So I will update the playlist now. See, everything that we are doing, is online. Just check immediately after this class. Just check the playlist; it will be there. So it's just for you to go and check again and go back. Do you get?
Okay. Yes, thank you.
Just feel free to drop please don't send me DM. Just send your question to the platform. Right? I hope you guys understand now. Imagine SFM, case study, FM, send me DM. So please, I beg. Just send your question to the general platform. I will see it now. Please, thank you. So on this note, I think we have to go, right? It's 10 p.m. already. Okay, Michael.
Good evening, sir.
Good evening.
Yes. My question not related to this lecture. My question is that as I can upload the new pack is in the syllabus.
I never know.
Okay, sir.
In as much me, I don't see new syllabus. I don't move on. So that's it.
Okay, sir.
Yeah. I've actually moved on. So I've stopped the streaming actually. So on this note, I've moved on.